Hey, good morning. Hey, where's the music, man?
Oh, I will add the music. We got to cue it
It's
up.
not the same without the music.
All right, here we go.
Hey, good morning. Hey, where's the music, man? Now I'm hearing reverb.
Outside that echo was on my.
Oh yeah.
Yeah, you got the music.
Oh yeah.
Oh yeah.
Yeah. Welcome to Algo Factory. We're gonna show you how to trade. Oh yeah. Build your algos. Yeah. Real slowly, like that.
That almost sounds like Riddick, dude.
Anyway, folks, good morning to all of you. It's Algo Factory. Listen, today's a special day. We're launching off our little beginners program. It's going to be live on YouTube for the first 20 to 30 minutes. Then, if you want to catch us live for the full meat and potatoes, the secret sauces, and the recipes. Oh, yeah, the recipe.
Oh, you sound like
Macho Man.
Oh yeah.
For the rest, yeah. I had too much coffee this morning. But for the recipes, you got to join algofactory.tech. Algofactory.tech, trade your job, upgrade your life. Because look, it's all about creating multiple streams of income. And a real business takes real effort. So if you're going to make trading a business that you're going to be doing from home, that is going to create income for you at the end of the day after day, week after week, month after month. Well, that takes effort. That takes know-how, that takes skills, and you're in the right place. We got the professor here himself. We got Algo Cowboy. He's going to be breaking down all the technicals. You got me running support as well as the fundamentals. It's a 1-2 punch, folks. You're going to get the full 3D chess when it comes to trading, building algorithms, being proficient. We have a saying here at Algo Factory. You learn through immersion. We're going to immerse you in the tech. We're going to immerse you in the lingo, in the technicals, in the fundamentals. And this way, you become better. So welcome all of you. Algofactory.tech. Cowboy, how are you this morning?
Killer, how you doing, man?
Doing good, man. I got my coffee and pumped up, and I'm ready to start my day. Feeling good for a Tuesday, bro. It's weird.
Yeah, right. It's one of those vibe things. Like
it is.
The sun is in the right place for some business like that.
Yeah. I looked at my star charts and it says that that Mercury is in Uranus. Something like that.
Yes.
Yeah. So that always works out good.
Yeah. Is Mercury that guy you met the other night or what?
Hey, you leave Freddie out of this.
Touche, my friend. Touche. That's almost like a 3-shay. That was pretty good.
No, that's all good.
All right.
So welcome all of you. So let's get into it, man.
Yeah, so this is the beginner class. So basically what we have is, we got a lot of people who came in to, work with us. They want to learn how to trade, eventually how to build an algorithm, which, building an algorithm is actually a lot more simple than people understand. Well, I don't know if it's simple. It's relatively simple. Let's put it that way. Nothing is completely simple, but people hear algorithm, they think, oh, I got to have some, giant computer and I gotta have some programmer, wearing like a hoodie and I don't know, whatever, right? They think that they've got to do all this very technical stuff. Well, when it comes to hard coding an algorithm, right, to where you build a trading algorithm and then you want it to trade for you while you walk away from the computer, you can actually pay somebody to code that for you. That's not something that you necessarily want to know how to do, although we do have people in the community who may be able to help. I actually have a guy over in Germany who I would have paid to do some coding. But at that point, that's a future event, right? What really needs to happen first is you got to build the algorithm, and that generally is done manually. I do know of how to backtest individual indicators using certain software, but building an algorithm actually, it tends to involve 2, maybe 3 indicators. You start getting past that, it just gets crazy. And actually, let's back up. A trading algorithm is not anything terribly fancy. It's just anybody who trades successfully, and some people who trade not successfully, are trading using an algorithm. Okay, So an algorithm is merely conditions A, B, and C line up, right? And then you take action D.
Yep.
That's all it is. So, let's just say you're a trader that uses indicators like many traders are, right? Well, you wait for those indicators to line up, maybe something to do with price action. And then when that happens, all of a sudden you take your trade. So that means that you are waiting for those conditions to line up, and then you take a trade. And as long as you do that the same way every single time, you are trading using an algorithm. And then, you can have that hard coded. It's possible. There are advantages to doing that. Like you can walk away, it can trade for you, it can trade overnight, as long as you've tested, for those overnight hours. Because if you're trading during the daytime, say from the New York session, and all you've ever traded is that, then the only results are from the New York session. You've never tested outside of that. So, you'd have to do some testing for all of the sessions, right? And actually, Stuart Holden in our Telegram and our paid chat, by the way, this is a YouTube, we are fanning this out to YouTube, but the only people able to ask questions are those who are paid members. And we might open it up to super chats at some point, because technically that would be somebody paying to ask a question. But Stuart in our Telegram chat is asking, first of all, he says V's on fire this morning. And yes, V's on fire all the time. Why do you think I work with the guy? V's like just on fire. It's just, that's how he lives. So sorry, let me ask the actual question here. Do the algorithms automatically initiate trades and stop losses, or is this a manual process? I've done both. So I have had algorithms that I actually helped to program. The programmers used my data. So they would talk to me every day. I would tell them and this in particular was a Bitcoin algorithm. And at that time, even now, but especially at that time, I was a hardcore, all I traded at that time was Bitcoin. All I traded. So, I really was in sync with the Bitcoin market. It was also a different market than it is today. So I really intuitively understood Bitcoin, and I had a good mental, a good listed algorithm for that, right? So not just a mental intuition, but I also had a good empirical algorithm for that. Okay, so that was auto traded. I did better manually trading. Okay, so that algorithm that I was helping to build, they had to talk to me every day to gather data, because Bitcoin and anything you trade is going to change on a daily basis. So they were able to have, without talking to me, they would have a certain amount of success, but then the market would change, as it always does, right? You can go through periods, and I'll show this on a chart on a high time frame, even on a low time frame. You'll go through different periods of volatility, right? And then what we had to do was we ended up having to turn on that algorithm during higher volatility periods, and we had to turn it off during lower volatility, because it simply didn't work. And, we had to develop a separate algorithm for lower volatility, and it just was taking so much time. I'm like, I had to pay more attention to how to turn that thing on and off than I did just trading. So, it can be done, and I've done it, and I've even made some money with a hard-coded algorithm. I personally trade manually. It just works better for me. If you have a lot of money to put to like millions of dollars for some high frequency trading thing like on TV, of course, that's a different story. But if you're going to hard code it, just understand that you're going to have to maintain a hard coded algorithm. You're going to have to kind of watch it, understand the conditions under which that hard coded algorithm is successful, and be ready to go ahead and turn that on and turn it off. So you have to forward test it a lot, but it can be done. I see Daryl is typing and asking a question. In the meantime, what I'm going to do is I'm going to share the screen and talk a little bit about, that business of the algorithm and the conditions under which it might or might not work. I'm on a I'm sorry, that's EURUSD. Let's go to BTCUSD. Okay, so I'm going to go to a high time frame chart. I'm going to go to like the 3-day. And I'm going to go look. Actually, this is pretty good. Okay, so we're going back to 2022 here, and there is volatility going on. Now, there's an indicator that we've shared in our paid area, right? At the algofactory.tech. The link is in the description. Go check that out. Okay. And also, just a quick reminder, everything we talk about here, none of this is investment advice, right? So everything we talk about is all um, just entertainment, education, that kind of thing. So talk to a licensed professional before risking your money on the markets. Okay. But yeah, Stuart, the chart's popping up right now. You should see it about, right now. So bearing that in mind, doing your own research and all that, we have an indicator that I shared in our group over at algofactory.tech. We have live courses every morning from the 30 minutes before market open until the 30 minutes after market open. And then I'm available all day long. And the Gorilla via the Gorilla here is also available all day long through the Telegram chat. So if I take a trade and it's like a swing trade, I'll put it up. People can see what I'm doing, stuff like that. So anyway, we got Daryl asking, so should back testing be used as a means to quote unquote reference what would or could likely happen during a trade given past data? Well, that's all it is, Daryl.
Yep.
So you're going to have an algorithm. You can go back in time. TradingView is the software that I use. There are other softwares. This one is mine. There are many like it, but this one is mine. So what I do is, I can actually hit a rewind button. It's called the replay button. And we've done this in our courses over at algofactory.tech. I really go over this. So go visit www.algofactory.tech if you've not seen it. If you're already a member, make sure you're going through the online coursework. There are 4 separate classes that drag you through this whole thing. Okay. So that'll answer that for you. But yeah, this is basically, you're going back in time, looking at the conditions lining up. And as they line up, you're going to take like a mock trade, right? You're going to take a test. You're going to basically take a fake trade, if you will, right? And then that will give you an idea of what kind of results you would get. So you're literally testing your algorithm back in time. So back to this volatility business, right? The algorithm that I was working with at that time, this area was a low volatility area with a couple of exceptions in there. You have moments of volatility where you got those big moves. Well, these comparatively big moves down. There's a little volatility there, a little bit here, but by and large, 80% of this time, it was just like terrible. So now the time I was actually doing this, we'll actually go back to when I was, I'll show you when this is really going down. I have to go to the Coinbase version and then, so we were testing this algorithm during one of the worst times to try to do a volatility based algorithm. And it was right here. Let's see, 2018. It's 2019 in the trough. And this is one of the worst volatility times in Bitcoin history, right? So Bitcoin had just fallen after its 2017 high, went through 2018, dumped through here. I remember this. I mean, when you do trading long enough, it's like you look at the chart, you're like, I remember those days. Like you start remembering what your life was going on during that time,
Everybody was signaling the end of Bitcoin. That's it. It's over.
It's over.
It hit 2,800. It's over.
Remember our buddy I want to say Schiff was telling us it was going to go to zero.
Oh yeah, Bitcoin's going to go to zero.
I like
gold
him.
for me at Euro Pacific Capital. I'll put it in the Brinks vault. So when the collapse happens, the U.S. government will come and confiscate it. I have no idea why they shut down my bank in Puerto Rico. This is look. I like Peter Schiff a lot. But he doesn't know jack diddly when it comes to moving funds, when it comes to jurisdiction, when it comes to a lot of things. I'll leave it at that.
That's right. It's he's a good guy. I think his heart's in the right place.
Yep.
His dad went through a lot, and so he's a product of that, and that's a good thing, I think.
Yeah.
I don't want to bag on him too hard, but when it comes to Bitcoin, he doesn't know his ear hole from his a-hole. So, all right. Sorry, Peter. That's just, I know I'm a peon compared to you, but that's just how it is. So here is like, I remember I was sitting on the couch watching this dump happen. Like when this dump first happened on this day, which was, it must've been Monday. It might've been Tuesday or Wednesday in kind of mid-November. I remember I was actually done kind of looking at the Forex market open, and all of a sudden Bitcoin just went to the toilet. It was really fun to watch. So I mean, I had already kind of seen it come in and taken a lot of profit off, and I watched everybody cry for the next year, the next 5 months anyway. But this period here, there was low volatility. And so you have these kind of larger candles. Excuse me, like right here, there are these larger candles where, yeah, sure, there was some volatility and that little algorithm that we built worked. But for 1, 2, 3, 4, 5, 6, 7, 8. So for a month, that algorithm was just losing trades. Maybe some wins right here, and then another, week and a half, and then another another month. So look, I mean, if you want to build an algorithm and you want to hard code it, just know that you're going to have to really, it's going to, I manually trade. It takes just as much time. And not on top of that, if I need to manipulate my algorithm, if I need to change my algorithm or whatever it is, because I'm always improving. If I need to make a change, go back test it, and all that stuff, I don't have to go and uncode and recode, or I should say, I don't have to pay anybody to do that. But a hint, what we're going to end up doing here, V and I were just talking about this before the show, and I don't know if it's right away. It's going to be quite the endeavor, but there is going to be an addition to this entire show about coding and what that takes. I don't want to say any more than that. Should I say any more than that, V?
No, don't say anything more than that. Algo Factory Tech is evolving, right? We're not only giving you the rudiments, the basics, and the technicals, and the fundamentals that you need to not only be a better trader, but to develop your own algorithm. We're taking it to the next level. And this is important. What we're gonna showcase and do next for Algo Factory has never been done before on any trading channel or trading room anywhere in the whole friggin' world. We're the first to do it. We're gonna let you guys see the very, very, I don't know how to put it. The very, I don't know. We're gonna pull the curtain back and you're gonna see the code, and I'll leave it at that.
Yeah, it's like the Matrix, literally. Yeah. Seward is asking, so no one needs to go to an exchange to make their manual trade? I don't understand exactly what you're asking there, Stuart. Are you asking like under the circumstance where it's coded? And then are you saying like, hey, if you code, then you don't need to go to an exchange to make your manual trade? If that's what you're asking, then yeah, that's, if you hard code an algorithm, right, it's going to go through, I'm assuming it's going to go through some form of API, and it'll go to your exchange. I personally use Oanda when I trade. I trade a lot of Forex. So what, I could build or have built an algorithm here on TradingView if I want. I've built plenty. I've built tens of algorithms. But to have one hard coded, it can be done right here on TradingView, which is, I think there's a free version. I have the top paid version of TradingView because I use the heck out of it. But that uses an API and it will trade on Oanda for you. Yeah, Stuart, okay, so I don't trade on the exchange itself, Stuart. I trade through TradingView on Oanda. So I actually can click a button and Oanda has an API that connects to Oanda, and I can do everything right from my charting software, right? For me, for Oanda, and it does for many exchanges. So the way to do that, and if you're looking at the screen right now, right? So you go to this arrow down here where it says on the very bottom, Forex Screener, Pine Editor, Strategy Tester, Trading Panel, and that's where a lot of this goes down. The Strategy Tester, Pine Editor, that's where the programming happens on TradingView. If you're elsewhere, you have to maybe code in Python. But if TradingView has its own language called PineScript, which is where you get the Pine Editor, but you click on that right there, that arrow that I just clicked here, this little up arrow, and you'll see all the different broker connections, all the APIs. I use Oanda, why that's starred right there. But there's OKX, there's crypto. You can plug into Binance. You can plug into Interactive Brokers if you want to do stocks. FXCM for Forex, Bitstamp, I mean, there's a whole. BitGet is a very popular crypto broker for crypto derivatives. I know a lot of guys on that. Forex.com is huge. So you name it. I don't want to say you name it, it's on there. There's a lot of stuff that's not. But I mean, if you're not in the United States, there's a lot of stuff. Look, Gemini. You want to do crypto. If you want to use Gemini, I don't really use Gemini. I use KuCoin. So there is a way to trade KuCoin through webhooks, right? So if your broker's not on here, what you can do, and this is where things get a little complex, where it might require a programmer, but you can actually, there's something called a webhook, right? So let's say that like my condition is that price passes this point, and then I do an alert, and I have all my software set up to make a trade based on XYZ condition. And the final condition met is for, price to hit that line right there that I just made. Well, the notifications right here, you see webhook URL. And basically webhooks are a way for programmers to sort of connect to your broker when TradingView doesn't have your broker. So it can be done even if TradingView does not have your broker on that list. It can be done. And I think the Gorilla also figured some stuff out on there. We got Shiavo asking questions. Shiavo is the name of the person, our friend here over on Telegram. When you use the term algorithm, is that another term to take history and charts and make calculated guess for what to trade? Yeah, that's pretty much it. So an algorithm is, in and of itself, we're going to look it up. Okay, I'm going to actually look up the term algorithm. Okay, and we're going to define it here. Gotta blow this up so the people, you all can see it. An algorithm is a set of finite rules or instructions used in calculations or problem-solving equations. It is a procedure for solving mathematical problem in a finite number of steps that frequently involves recursive operations. So, they're used as for data processing, but here's a good part here. They act as an exact list of instructions that conduct specified actions step by step in either hardware or software-based routines. Okay, so tying your shoes is an algorithm. When we say algorithm, what it is that you have, I use indicators. You don't have to. You could use pure price action trading, but I like to use both indicators and price action. And when, let's just say, conditions A, B, and C line up, then the trade is taken. And yeah, you can code, and this goes back to Stuart's question earlier. There's a bit that I kind of didn't answer. To code your stop loss and take profit as an algorithm, when I help people program their algorithm, I had it coded as a distance from the entry. And I back tested for the distance from the entry. And that's a little tricky because, how do you, I'm not sure yet how to, maybe some Billy badass programmer knows how to actually program for like market structure. But as of now, I haven't quite figured that out. So I did it from distance to entry. And when I did the back testing, it was all based on distance from entry. So I did 1.5 ATR. 1.5 ATR from entry for the stop loss. And then I did a ×1, a ×2, and a ×3 of the risk for the target. So just to keep it super simple, that's how that was done. I know I'm starting to get super technical now, so, but that kind of will answer the question. Valentine 828, when you first begin and go to a chart looking at whatever, Euro, USD, whatever, and looking at history, it's up, it's down, it's stable. How to decide where to begin on the history of the chart? That's a good question, Valentine. Okay, so whether it's up, down, or stable, that's just going to be the market, right? So whatever day you go to look at the market's going to be what it is. So I just go and I pick a date. I just go back in history and I pick a date. Now I do make sure that I either avoid August or I make sure I test during August, and I have that in my mind because August is a very low volatility month. The same with the second half of December. That can be, the Santa rally is good, but especially after, okay, not the second half of December. Let's say the last week of December and the first week or two of January can be very quiet. And then, of course, the whole month of August, everybody's traveling, they're on vacation, stuff like that. Low volatility time. So, unless your algorithm is good in low volatility, you have to understand that those months might be months to avoid, quite possibly months and weeks to avoid. Other than that, I test. I just make sure that I test. I sample different times in the market. And also, unless you're hard coding, then you want to make sure that you're only testing during times that you would trade. So if you are trading the New York session, and only the New York session, then you need to make sure you only test the New York session, right? And then also, I trade per time frame per asset. So what I mean by that is, if I'm going to trade, say, Bitcoin, right? I'm going to trade Bitcoin on the 30-minute chart. That's going to be 200 back tests based on Bitcoin on the 30-minute chart, and then 100 forward tests with a very low entry, right, to save money. So forward testing means basically you're live testing. You're actually trading, but you're trading with very small money. So, but then that's the 30-minute. Then I have to also, if I want to trade, say, the 4-hour on Bitcoin, then I actually have to test the 4-hour separately and do 200 tests. Or if there just isn't enough history, then I just do 5 years worth of history on that. So, but how to decide where to begin? It really doesn't matter. As long as you're testing during times you would normally trade, that's key. And we got 3 minutes left in the beginner course. So if anybody has any last questions, go ahead and ask them. And otherwise, what we're going to do is we'll cut the feed. With YouTube, we're going to go ahead and add some data to the description box. Okay, so that way you can know where to find us over at algofactory.tech. And oh, good. Valentine says perfect. It's starting to make sense. That's good. Yeah. And this is a beginner class, right? So there's the next hour that we do, and we do this over in our own private stream, where no one will see that here. That hour is going to be a bit more advanced, and understand that we also have pretty extensive coursework on our website. So all this beginner stuff, not all of it, but a lot of the beginner items are on there. I don't necessarily go through the super basics. I do some super basics. If I were to go through all the basics, it would be thousands of videos. It's just trading is that big of a subject, but I do what I can to give the necessaries and point people in the right direction. But always remember, do your own research, and before you make any trades. You can lose money, but you can also win. So that's what we're here to do. V the Gorilla, what do you want to leave everybody with out in YouTube?
No, with that being said, listen, all you guys on YouTube, thank you all for watching this. And if you are watching this for the first time, listen, join algofactory.tech, trade your job, upgrade your life, learn how to not only eat the fish, but catch the fish. And that's what we teach you how to do. So thank you all in YouTube land for listening in on this beginner's course. Again, you guys can ask us questions in the live chat. It's a paid live chat, just whatever you want to donate to us to ask a question, go ahead and hit that. But we're going to be switching off right now to the members only feed. So thank you all, and sayonara. Take it away, cowboy. Kill it.